alternative minimum tax, AMT. This one's going to be a doozy of a video. It's AMT, but we'll get through it together, I promise. So no changes for 2025. That all stays the same. 2026 onward does have a change. Now, the brackets for AMT did not change. Remember, AMT has two brackets, a 26 and a 28% bracket. Those didn't like sunset to some other level or anything like that. Those continue on as they've been. But the exemption did change. And I think to understand what the exemption does, we probably need to dive into the AMT calculation a little bit. So on screen here, let's just go through the 6251 form. This is how you calculate the AMT. This is the 2024 form, the most recent one I could find. I don't think 2025 is out yet. So you start with your taxable income from Form 1040, right? So you've done your whole calculation of what your taxable income is, and on Form 1040, that's what you use to calculate what the tax is. That's just the starting point for AMT. We start there, then we add back in 2A, we add back either the standard deduction or we add back the, if you itemize, you add back the state and local tax deduction. And you might be thinking, oh shoot, well that's new because the state and local tax deduction's higher now, and it is, but I'm guessing that that higher deduction won't show up here a lot because remember that phases out at a certain income level. And I just wonder if most people who are hit with AMT are at a certain income level, and so they're not going to, you're just going to see 10,000 on this line just like you normally have. I don't know what to see about that. The lines 2B through 3 are all your other preference items and adjustments. That's the stuff that is really scary about AMT, but that's not relevant to the thing that changed. So line 4 then, if you look at line 4, they call it the alternative minimum taxable income. And that to me, I know it says taxable income, and so you're thinking, oh, that's like taxable income on 1040. I always think of this as like the AGI of AMT, meaning it's the amount of income before you take what is like, it's like a standard deduction. It's called an exemption here. But basically it's like your income, your tentative income before then you get this thing where you can pull some money off your income. So to me, it's a lot like a standard deduction. It's called an exemption in AMT. But that's what's changing starting in 2026. So just to show you how this thing works. So like, I'm gonna highlight it here. For a joint filer, the exemption is 130, this is in 2024. This stuff is inflation adjusted, but in 2024, it was $133,300. However, there is an income phase out on this. And so if your income on line 4 is above this number, this is like the threshold, then this exemption starts to phase out. And so two things changed here. One, this number here, the actual threshold for the exemption, it's actually going to go down in 2026. So what they did was, so this is 2024 and this is inflation adjusted. So assume like, in 2025 it's going to be, close to 1.3 million probably. But then in 2026, what they did was they said, okay, actually calculate the 2026 threshold as if the 2025 threshold was $1 million. And so if you're assuming like 3% inflation, for example, the new threshold in 2026 will be like $1,030,000. So what you can already see is we're going to be phasing out this exemption earlier, okay? Which means more people are going to get hit with AMT. Hello, this is me checking in from the future. The future 24 hours after I recorded this approximately, our thinking on this has changed a little bit. Our interpretation of the law has changed a little bit on this. Let me show you where the confusion came from. It's a small change, but you'll notice this section of the law says, and this is what I just described, calendar year 2025, in the case of $1 million in subparagraph A, 2I. So we interpreted that to mean, okay, behave in 2026 as if it was $1 million in 2025. But if you scroll up, same document, you've got 2026, $1 million, paragraph, subparagraph A1, 2I. Same thing. And so some people are thinking that it's 2026 $1 million. Some people are saying 2025 $1 million and then inflated the way we did originally. We are coming around to the idea that we should code it as $1 million in 2026. Easy to flip back if it ends up being the other way, but what's better about us coding it this way is it's slightly more conservative. It's a lower threshold. So anyway, when you use the software, depending on when you get in there, you'll probably see us fix this to be $1 million by then. And so, that's just part of the fun. All right, back to non-future version of me. What's more is the speed at which this exemption phases out is going to be twice as fast as previously. So previously, or I guess currently through 2025, this amount phases out at 25 cents on the dollar above that threshold. So as your income gets over that threshold, 25% of this exemption gets melted away as you go over that threshold, right? That's changing to 50%. So not only is the threshold going to be lower, but the speed at which the exemption melts away is going to be twice as fast. It just means that more. So once you take away that exemption, line 6 to me is kind of like the taxable income equivalent to what you'd have on 1040. So rather than work up like a ton of different examples, I'm going to work up one example here. This is 2026 current law, the bill that got signed, and then like what the old law would have been. And I'm going to show you how someone is indeed getting hit with AMT earlier. If you ever want to like create an example in scenario analysis that will generate AMT, create an example where someone just has a ton of capital gains. So in this case, this person has no income apart from 1.3 million in capital gains. Now remember, in the old rules, let's go back to 6251. Under the old rules in 2026, remember this was going to have 2 years of inflation. Under the old rules, your exemption phase-out threshold would have been around 1.3 million, right? So you weren't going to really see any adjustment to this number under the old rules. Now under the new rules, 2026, this exemption amount, I'm guessing, is going to be like 1.03 million. So our amount of capital gains income is well over that threshold. So we're going to see way more exemption phase out, and that's what's happening here. So if I scroll down to the AMT section, you can see under the new law, this particular client is getting hit with $5,000 of AMT, whereas under the old law, they weren't going to be hit with AMT. And I'll pop this open. If you want to kind of dig into these numbers yourself, if you click this little calculator icon next to the AMT, we actually put up like a version of that form 6251. So you can see the math of what's happening here. And I'll just draw your attention to line 5. Remember, line 5 was that exemption amount. So line 4 was our alternative minimum taxable income. And then line 5, we've almost phased all of it out. It's only $6,000 left. I could probably tailor this to get it all the way to 0. Let's look at the example though under the old calculation, the calculation that exists in 2025 and then will be adjusted in 2026. We're going to see the same number here on line 4 because it's the same income for both, but we're going to see a much higher exemption on line 5 and therefore a lower taxable AMT income. All right, so let's pop this open. Line 5, yeah, you see line 4 is the same. The income is the same across both of these, but I have much more exemption. And remember, I kind of think of that as like the standard deduction of AMT. That's the thing that everybody gets that taken off of their income, and then we calculate the tax based on what's left. So that's what's happening here is, again, that threshold is getting hit earlier, and then also the phase out is happening faster. There, we made it through an AMT conversation. I hope that was helpful. But I think the long and short of it is tools like scenario analysis are helpful because it's going to allow us to run these numbers and then see how AMT is going to filter its way into people's taxes in ways that potentially they hadn't before. So we have to be even more careful or even more knowledgeable about how AMT works, because I think we're going to see it a little bit more than we did previously.